We've seen very significant investment in capacity across high-tech manufacturing for China over the last 5 to 10 years. That's been from everything through solar panels, through electric vehicles, which also we're seeing a lot more on roads around Australia and the world at the moment. And so basically continued expansion of that manufacturing capacity and the exportation of those goods around the world as people look to try and minimise their use of oil over time will provide quite a significant windfall for them.
Given China is the world's largest importer of oil from the Middle East, why does Westpac believe the war will prove a net positive for China's economy?
Well, to start with, we have to know that they have very significant strategic reserves. So they have a capacity, unlike really any other country around the world, to basically use those reserves to continue on with business as usual for an extended period of time. It's also notable that they have access to Iranian and Russian supplies already in boats around the region, so they can basically use that floating storage to actually supplement their additional on-land reserves, and that really provides them with quite a significant benefit. The other sort of major point more so to thinking about the longer term is that really we've seen very significant investment in capacity across high-tech manufacturing for China over the last 5 to 10 years. That's been from everything through solar panels, through electric vehicles, which also we're seeing a lot more on roads around Australia and the world at the moment. And so basically continued expansion of that manufacturing capacity and the exportation of those goods around the world as people look to try and minimise their use of oil over time will provide quite a significant windfall for them.
Australia had about 30 days of reserves or so when the war began. How much better prepared was China?
It's a multiple of that. So on the estimates we have, it's probably between 6 and 7 times what Australia has in terms of total days of supply.
Can Westpac confirm reports China is re-exporting its LNG and oil reserves now at higher prices?
Well, I think at the end of the day, they do have very significant refinery business. So they are looking to provide those goods to market. Really, it's a commercial arrangement, so it's a matter of kind of individual people they supply around the world will have come into contracts with them, and that will be different long-term contracts as well as spot contracts, and therefore they'll have required prices on all of those things. So there are a lot of different contracts available at times. It's hard to disentangle and give you an exact number.
Is the way China's been able to exploit these advantages as a consequence of the war part of the reason why its first quarter GDP beat expectations when it came in at 5%, higher than the year prior?
Yeah, I mean, it's beneficial in terms of sort of sentiment as that flows through to the consumer, but really the outcome we saw there in Q1 GDP was a much broader kind of story there. It is in part what I was mentioning earlier about sort of the export growth they have seen. So the trade surplus overall has doubled or more than doubled since the pandemic. That's been quite a significant windfall for them, sort of contributing to GDP. The investment that's tied into that sector as well, which again is not determined on a quarter by quarter basis, but is a number of years in the making, has also been quite a significant support there. The other point that's really changing from last year to this year is we're starting to see more of a positive impetus from the property investment sector. So construction has fallen by about 40% over the last kind of 5 or so years, and now we've actually started to see that rate of decline reduce, and so that's actually a positive for GDP, and that was notable in Q1, and we do think that'll be a favourable factor for GDP going forward through the rest of the year.
The Chinese property market has also been an important driver of Australia's own economic fortunes. What are the implications of that?
Well, it broadens out their demand base for our commodities. So they have still been demanding quite a significant amount of iron ore to put into utilities investment and roads and rail across the nation, being China. They've also been working across Southeast Asia, building more construction over there, which is in part using Australian commodities as well. But now the property sector is starting to stop contracting and actually start to potentially increase in terms of scale. That will provide more demand for our exports. That being said, there is now sort of more supply coming globally as well. So we have to factor in that Africa is exporting iron ore. We're seeing a lot of Asian countries also export various commodities as well. So there is greater competition with Australia for those kind of who's going to be exporting to China.
Elliot Clarke, terrific to talk to you.
Thank you.